All right, friends, I hope each and every one of you is having a fantastic day and ready for a few stories from founders who are actually building on Bitcoin. Today, we're joined by founders of Alex and Arkadiko, who have exciting weeks ahead of them. Plus, of course, we have Dan Held, who is eager to discuss all things DeFi on Bitcoin. So go ahead and give me a 100 to welcome our host, Muneeb Ali of Stacks, and Patrick Stanley, community lead of CityCoins, and the rest of our guests.
Awesome, super excited to have people here. Always amazing to have Dan Held. But I feel like today the spotlight is really on Arkadiko and Philip. Philip, how are you even awake? I feel like you haven't slept in the longest time.
It's been a long day. So yeah, we started deploying about Sunday late nights, Monday morning, and we've been like working nonstop until now really. I was like, oh shit, I need to join this Twitter Space thing. But happy to be here, super excited, and yeah, our launch went really well. So super happy today.
So people who don't know Arkadiko, think of that as the first stablecoin where your collateral is actually earning you Bitcoin. So pure Bitcoin yield coming out of the collateral. And interestingly, I'll let Philip kind of like describe it as well. But one of the things that got the team initially excited, obviously A, like building on Bitcoin, but B, having this sort of a new financial instrument where you could borrow against your crypto, but the interest rate could actually just be paid down automatically because of the Bitcoin yield that you're getting on your collateral, right? But I'll let Philip like describe more.
Yeah, correct. So we market it as a loan that repays itself, and it's exactly what you described. What you just said, Muneeb, your collateral, which usually at least in the beginning is a Stacks token, so STX, you put that in a vault. We stack those tokens, improve and transfer the consensus mechanism of Stacks for you. That earns a yield in Bitcoin, and that Bitcoin yields about 10% APY. And so what we call the stability fee, the interest rate that you pay on what you're borrowing, is a lot lower. The net yield is the net interest rate, is about 1%. So your net yield as a result would be about 9% if the Bitcoin yield stays, constant at around 10%. So you're actually making about 9% while you are borrowing against your own crypto holdings, which is a super powerful concept. And so we launched that today. Just today, there were just under $4 million in USDA minted, and we have over $25 million in TVL, total value locked in the platform. So for me, that's a wild success. I did not expect this, which is exciting, but also a bit scary. But yeah, everything worked. We went through security audits. Really happy to be the first DeFi on Stacks to be launching, and yeah, upwards and onwards.
This is amazing to hear. So 25 million TVL on day one. By the way, I haven't minted yet, so more incoming.
Awesome.
And can you kind of walk me through, because I understand some of the basics of some of how Stacks and Bitcoin kind of work together, but also like this is kind of like a whole other abstraction on top of that. So for example, I'm familiar with the proof of burn process that has been called like proof of transfer, and that throws off Bitcoin, like a yield in Bitcoin when you hold the token, the Stacks token or other tokens in the in the Stacks ecosystem. But I think we might have glossed over a lot of details, and I'm curious on my own part in terms of like, okay, so like walk me through exactly how it works. Like I've got what collateral are we talking about? Stacks collateral? Or are we talking about Bitcoin collateral on the Bitcoin blockchain? And then I'm borrowing dollars over on Stacks. Can you kind of walk us through an example of how that works?
Yeah, let me give it a little bit.
Go ahead,
and then I'll hand over to Philip. Like I think I'll fill people in on the Stack side, and then Philip can dive in on Arkadiko itself. So the way to kind of like think about this is that the goal of Stack is to enable fully expressive smart contracts around Bitcoin. So almost by definition, this has to be outside of Bitcoin script, because Bitcoin script is limited by design for security reasons and so on. So the Stacks layer almost by definition has to be outside of the Bitcoin script limitations, right? So that's the first thing to understand, that why do you even need the separate kind of like stack there? And the gas asset that's over there is mostly because we wanted an open network, right? You could build something like this as a federation. So Liquid, for example, is a federation, or you could build it as an open network, right? So we basically are believers in open networks, and that's why there's a separate gas asset that incentivizes the miners to kind of like run the stacks layer, and it is the asset that you use to pay for smart contract execution, right? And which, in my mind, is a very clean separation between store of value or money, which is Bitcoin. So Bitcoin is the money layer, and Stacks is the smart contract layer with the gas for smart contract. But then these two layers interact with each other, right? And that's where some of the more interesting things happen. So what Arkadiko has launched right now is that it's basically using the native Bitcoin yield mechanism in an interesting way, that when you're minting kind of like a stable asset, they're using the underlying Bitcoin yield that Stacks has, and we can dig into how the yield is generated separately to basically give you a return on your collateral. But I see this as almost like the first step, because you could do other interesting things, like you could do native Bitcoin swaps. So you could do a BTC to some other asset swap. Like, for example, you could swap Bitcoin directly to USDA now, and that would be like a completely decentralized KYC free swap between Bitcoin. So Bitcoin transaction would be on the main Bitcoin chain into a stable coin, right? And the next step could be that you could swap into a Bitcoin derivative like XBTC, which is live on the stack side, and then potentially use that in collateral. So that functionality is not live yet, but that, like, from a technical perspective, it's fairly easy to do. So at that point, you're sending a Bitcoin transaction to basically swap into a Bitcoin derivative on Stacks, which you're then using to mint a stable asset. And this is completely decentralized. It's like decentralized tooling around Bitcoin. You're not going through any custodian. You're not going through any kind of like KYC party in the middle, and so on. So I'll stop there, and I'll hand over to Philip.
Yeah, really great explanation, I think. Not much to add except for Dan. Yes, we're using the native Stacks layer, and we use Bitcoin to settle on it, to finalize our transactions. Because, well, as you might know, that the Stacks blocks that get mined, ultimately they settle as a Bitcoin transaction. And so we do leverage the security of Bitcoin there. And as Muneeb said, we do leverage proof of transfer to earn a yield in native Bitcoin. But that native Bitcoin yield is actually at this moment that is traded into Stacks, and then the Stacks is used to pay off those loans. And there's flexibility around it, but that's a default option. In the future, we might, give our users the option to receive Bitcoin natively, while also making their Stacks or their Bitcoin holdings more capital efficient by lending against them. And again, this is all decentralized in a way that you don't have to KYC, as Muneeb mentioned. But the bottom line is we are using Stacks and STX as a native token to start out, and that's where we start. And we have a lot of plans for the future, but this is the beginning, and yeah, we'll go from there. As soon as this is stable, we'll probably announce more things, because we have a lot going on. But first, want to see this work for the next few weeks or so, and then we'll go from there.
Yeah, so I'm kind of constantly putting on the normie hat. I think Frank and I have been in meetups and stuff where it gets a little technical. Like, so Philip, what do I start with? Do I have like USDC or Stacks or Bitcoin, and then like walk me through the steps from like a non-technical perspective?
Yep. So you have STX, the Stacks token, in your wallet, in the Hiro web wallet, that is. So that is a web extension where you can deposit some STX tokens. And so that Stacks you take into our web app, that is app.arkadiko.finance. You simply connect your wallet. It's a lot like the MetaMasks of the world. You connect your Hiro web wallet, and you come in this interface where it asks you to create a new vault. And the vault is simply what you have in real life, right? You would store your Bitcoin in a unchained capital vault, or you would store your gold in a vault. Similarly, you would store your Stacks tokens in a vault. Once those Stacks are in that vault, we know the dollar value of that position. And based on that dollar value, we decide how much we allow you to borrow against that. And so it simply is one on-chain transaction that says, I want to collateralize 1,000 Stacks tokens, which is approximately $2,500. And against that, you say, let's say you want to borrow 500 USDA, which is our stablecoin. So after that transaction settles on Stacks, finalizes on Bitcoin, you have 500 USDA in your wallet. The Stacks tokens, they are illiquid, they are locked up in the vault, and they are stacked improved transfer, earning you that yield. That yield is then converted back into Stacks and used to pay off your loan. I don't know if that helps, but I hope it's normally proof.
Yeah, that definitely helps a little bit in terms of thinking through how this works with like the collateral involved and how you borrow against it. And you said like, I'm guessing there's like pricing data that's piped in via Oracle, so we know exactly how much the collateral is worth.
Correct. Yeah, exactly.
Yeah, let me explain like my user experience, right? So I'm still in the process of doing this, but I was playing around with the app an hour ago. So the use case for me would be, let's say I'm a holder of Stacks. I'm bullish on it. I'm a long-term holder. I'm gonna keep hold Stacks anyway. But I do want some liquidity. And most of my holdings would be kind of like locked up and earning Bitcoin anyway. But in this vault, what I would do is, so I'm basically taking a little bit higher risk. And my risk now is that instead of directly just locking up Stacks, earning Bitcoin there, I am picking, my parameters in the vault. So let's say I'm very, very careful. I don't want to take too much risk. And for a $100 loan, I'm willing to put up like $1,000 in Stacks, right? So the price of Stacks would have to dip like, a lot, like let's say 10x, or it can lose 90% of the value before I hit the price at which I will have that 10% loss of liquidation, right? So now what I've done is I've effectively locked up my Stacks through Arkadiko, which I was going to lock up anyway on Bitcoin, right? But now I have liquidity in a stable asset, which I can basically use the liquidity however I want to and return the loan on my own time.
Okay, and then the stable asset that's created, how does it, is that kind of like USDC or USDT where it's like a more centralized stable coin, or is it a algorithmic stable coin?
Yep, so it's algorithmic, meaning that it is created on chain. It's completely automated in the sense that there's never human intervention in creating it, minting it. It's completely ran by software, by smart contracts. So when you mint USDA or you burn it, it's its own native Stacks token. Now that USDA can obviously be turned into USDC or USDT and then turned into fiat or turned into Stacks. Like, the example that Muneeb gave, if you want to leverage yourself, get more Stacks exposure, you can do that through this USDA loan. But USDA on its own will be a Stacks native stablecoin that can be swapped.
Gotcha. And can Arkadiko work with I think USDC is on the Stacks blockchain. Let me know. I forget if it is or not, but does this all work with more centralized stable coins, or does it can it only work with on-chain stable coins?
Yeah, so USDC is almost there. It should come, pretty soon. And once USDC is on Stacks, you will be able to swap it against USDA. Yeah, so it works seamlessly together.
Okay, cool. So that's on the stable coin side. So it can either be the Arkadiko, stablecoin created on chain using Stacks as collateral, or it could be a centralized one. And then in the future, I mean, with kind of more Bitcoin oriented stuff, would you be able to move Bitcoin on the base Bitcoin chain layer 1, move that to an address on Bitcoin, that's controlled by a smart contract on Stacks, and then like effectively like build a Bitcoin vault and create stable coins from that, or what are you guys thinking?
Yeah, I can comment on that. So I think the fastest path to it right now is having XBDC. So XBDC is a custodial BDC. Think of that as like wrapped Bitcoin on Stacks. It's by TokenSoft and Anchorage. So Anchorage is your custody provider, and they have issued XBDC. And you can do a Bitcoin to XBDC native swap, right? So native swaps are basically like you do a Bitcoin transaction and you swap your Bitcoin into a Stacks asset. An asset that it could be anything. It could be STX itself, it could be USDA, it could be XBDC. But the interesting thing about the XBDC swap is now you're not taking a price risk, right? So you do a Bitcoin transaction, you swap into XBDC, and now you're using XBDC in these vaults. Like it's not there yet, but it's a feature that is relatively simple to add because they already support any Stacks-based assets in Arkadiko. So I think that's the way to get Bitcoin in there. But the tricky thing is going to be because Stacks has a native Bitcoin yield, which is the main value prop of Arkadiko right now, that you're actually earning a Bitcoin yield. Your Bitcoin is not going to have Bitcoin yield until there are other DeFi protocols or products that are available, because I do think that people will start getting some sort of yield on their Bitcoin on the Stack side. Right now, that kind of like market doesn't exist. Like, for example, you could get a Bitcoin yield through lending or something else. So I think then you might be able to park your Bitcoin as collateral with some sort of a yield that's coming from some other DeFi Lego block out there. That's kind of like my thinking.
Okay, gotcha.
And I should point out that the XBDC step in the middle, that's just the most practical way to do it today. You could have more trustless ways to represent Bitcoin, and even in the extreme case, the ideal thing would be if you have like either completely trustless, like peg in, peg out, or your smart contracts are able to basically just monitor the Bitcoin chain and do interesting things there. Like down the road, like I think what would be really cool is that the locking of the Bitcoin happens on the Bitcoin chain, and the smart contracts can just directly kind of like react to it instead of even having a middleware asset like XBDC in the middle to represent.
Right. Yeah. That's kind of what I was hinting at, is like what that future state could look like. Because with Stacks, there could be, it can monitor on Bitcoin on-chain transactions. So you could create a smart contract where like Bitcoin is moved to an address on the Bitcoin blockchain, and that's effectively been deposited to like a vault. But I'm guessing that you guys are trying to go for like MVP, and MVP requires kind of the easiest solution versus something more complex like that.
That was the most kind of like practical thing, and I can give an example from NFTs to draw an analogy, right? So if you look at the NFTs right now, which are, by the way, I don't know, Dan, if you followed this, but these Bitcoin NFTs have just started taking off in the last couple of weeks on Stacks, because these things get minted at a Bitcoin block. Again, all the transfers are recorded on Bitcoin, and there's so many new artists showing up, so many kind of like marketplaces opening. But imagine the NFTs, the way they're implemented, they're more Stacks native, because that's the most obvious way to implement it. It's just a smart contract on the Stack side. But I've been talking to some developers where what they're doing is they're trying to make the NFT implementation more Bitcoin native, meaning that the ownership of the NFT can be defined by a Bitcoin address. Even the transfers can be done through Bitcoin transactions, right? At that time, it will feel like really like a Bitcoin native experience. If someone says, here's your Bitcoin address, and here are the NFTs you own. If you want to transfer one of them, just do a Bitcoin transaction, and you can change the ownership of your NFT from one Bitcoin address to another Bitcoin address. That's pretty cool.
Yeah, I just think, for me, I would consider myself to kind of like I would say like more Bitcoin moderate, people forget that NFTs actually started on Bitcoin with Counterparty, with Barrera Pepe's back in like 2015. It's like a super long time ago. Almost no one remembers that. So for me, like I'm pretty conservative normally, but like for NFTs, I'm like, if people want, I'm not a a huge fan of like art. You know, I don't have like a ton of art pieces or anything like that or anything there in my home, like physical art pieces, but I certainly respect people's wants and desire to do so, right? Like I think that people are super expressive, and this is like a digital scarcity representation. So even though I'm a Bitcoiner, I still think like NFTs are super interesting, and you know, I support people wanting to do it. It's you know, if people are subjectively want to value something, then that's some of the same principles that underlie Bitcoin's value. Where we all agree that Bitcoin is worth something. Same thing with like a piece of art.
Completely agree, Patrick. You were saying something?
Dan, are you saying Bitcoiners are free to buy things?
Yeah, that's where I'd say I'm more like a Bitcoin moderate. You know, if people want to go do it, they want to go do it. That's the whole point of like libertarian ideology and the whole point of Bitcoin. You know, I've got my personal vibes on stuff, but yeah, if people want to buy NFTs, if people want to buy JPEGs, let them go buy JPEGs. Yeah, it's all subjective value.
I was just mentioning earlier, like the transferring a NFT using a Bitcoin transaction. That sounded really cool. I actually just like 30 minutes ago transferred Stacks using a Bitcoin transaction, which is, and it always feels like a miracle every time I do it, but it feels good to do it for sure.
Yeah. I see Meltem in the audience as well. Meltem, it was great to see you this week. We'll try to see if you can come up.
I invited her up too, but would love to hear a little bit more from Chiente with Alex. I know that they just had their testnet, which launched on Stacks on October 10th with a suite of Bitcoin DeFi primitives. We'd love to hear the latest of what's going on there with you. All exciting stuff so far.
Sure. Hi, this is Chiente. I'm a CEO and co-founder of Alex. Actually, today I'm really happy to be the best supporting actress. As Muneeb said, the limelight should be all on Philip, and congratulations on the vendor launch. You know, we will be the second one of DeFi on Stacks to launch. And we are hiding behind Philip's, you know, every pain, every sweat that Philip and his team have been enduring is a learning lesson for us. So we are really very grateful. So for people who don't know about Alex, I guess most of you don't know about Alex. Alex stands for Automated Liquidity Exchange. We like to say that we are the first full service DeFi platform on Bitcoin via Stacks. What it means is that, you know, we are Wall Street quant. We are veteran Wall Street quant. We really want to build a whole financial system, financial world on Stacks. And we like to say that Alex bring your Bitcoin to life. You can launch new project, you can lend, borrow in fixed rate, fixed term without liquidation risk. You can yield farm, you can rewrite finance and reinvent culture. So that's what Alex is about. As you mentioned, Frankie, that we had a very public testnet. It started with a pre-launch party. Very exciting pre-launch party that Muneeb, Patrick, and many people here have dropped in. And then we started October 10th in the evening of New York time. We were so nervous. I think I applied half of my eyebrow because in the very beginning, people didn't know, obviously a lot of people didn't know how to set up the wallet, set up the testnet properly. So there were, you know, quite a bit of mistakes. But 10 days later, I think everything have calmed down. We have already sent out 8,000 invitation codes. More than 2,000 tests have been done. The mainland launch is scheduled end of November, early December. So we still have a bit of time. So I would like to encourage everybody who have received a test code, the invitation code, please come to test us, break us, make this yours. You know, bring your music, bring your food, bring your chairs to come to break Alex. The more you break us, the better we will be. And then we always like to say, Alex is the first service, decentralized bank for the bankless as well as for the bank. So yes, that's where we are right now.
Yeah, I'm personally fascinated to kind of hear more about Alex. I remember you all pitching in the accelerator program, and I think you know, for me, like I've explored RSK and Sovereign, which are another DeFi project on Bitcoin. That's super interesting, and through that process I learned about automated market making, how the yield is thrown off from that, and I think for the audience, like I can go into if you want to explain it, you can, or I can. But yeah, do you want to give some folks an idea of like what AMMs are, like automated market making, why that's interesting?
Well, automated market making is an innovation that doesn't come from our team, right? So it started with a Uniswap. It's a very innovative way of market making. But I think with this limited time, I want to focus on, Dan, if you don't mind, on one thing which I think is the jewel of the crown, which I think is going to make DeFi much more mainstream, is really the collateral rebalancing. What it means is that I think Muneeb talked a little bit about that you can put up your collateral and you can borrow. For example, you can put your Bitcoin as a collateral or XBTC as a collateral. You can borrow. And all other DeFi so far, what they do is that you have the liquidation risk, right? So if, for example, Bitcoin being so volatile, and I would like to point out that, with this uptrend of Bitcoin price, but with the ETF and more ETF will be introduced to the market, it also means that the volatility is going to be higher, right? It's not going to dampen the volatility of Bitcoin. But with this high volatility, we know that the liquidation risk is something that is going to happen. So what our team have done is that we introduced this collateral rebalancing mechanism, in the sense that behind the scene, there's a smart contract really immediately split the one asset into two assets. One is riskless, one is risky, and we will automatically rebalance it. It depends on the Bitcoin volatility and the movement. What it means is that number one, we can offer much more aggressive loan to value. So people are used to you have to put out that more than 200% of a collateral in order to borrow 100%. In our case, it's actually the opposite, right? The loan to value can be as aggressive as 80. So that's number one. But number two, I think more importantly is about no liquidation risk. Because as an economist who I am, where I come from, I always think about Pareto optimal, right? So you want to have a system where you don't want people to be liquid. You want to stay there as long as you can together to survive the up and down, because volatility is mean reverting. But number three, I think that's really defined the DeFi 2.0. I think Philip and my vision are very similar. Is that looking at DeFi 1.0, where can we improve, right? DeFi 2.0 is, for example, about what Philip is building in Arkadiko, is that it's self-paying loan, but also about the capital maximization and efficiency. And that's what collateral rebalance is about. And that's what Alex is about. It's really to maximize the capital efficiency. Does that make sense?
Awesome. That made a lot of sense.
Thank you.
So Meltem, I think today you announced that CoinShares has made an investment in Arkadiko. So we'd love to hear about, how do you view the work that they do?
Yeah, super excited to be here, and congrats to the Arkadiko team, the Alex team, and everyone, and the Stacks community more broadly. I've known the Blockstack team. I still call you that. I'm so sorry if you name and Patrick, but I've known the Blockstack team since 2015. When they first started building towards this vision, and it's really cool to finally see the network launch, to see so much activity on Stacks NFTs, and now Stacks DeFi launching. We're just really excited. Like, one of the things we feel really strongly about it at CoinShares is Bitcoin. And we're not maximalist, but as my research analyst likes to say, we're maximal-ish, where we do believe the settlement guarantees and the security of the Bitcoin network have really unique value proposition that can't be replicated by other protocols, other networks. And while we think those protocols and networks are valuable, we think building on top of Bitcoin is also incredibly valuable in terms of improving extensibility of Bitcoin and bringing new use cases to Bitcoin holders. I think one of the really cool things about Arkadiko, when we started chatting with the team at Arkadiko, one thing I really liked is the ability for these loans to become self-paying, thanks to stacking rewards. And at the same time, through creating this USDA stablecoin through the collateralization mechanism and the ability for people to open vaults and to mint USDA using their stacks. One of the really cool things is we can now have a Stacks native stablecoin that doesn't require a centralized custodian, but rather is maintained by this decentralized network of Stacks holders who are participating in the Deco ecosystem. So that was one thing that was really exciting to me, is Arkadiko is solving multiple problems at the same time. enabling Stacks users to take out loans and get liquidity more easily. But at the same time, it's also making the Stacks network stronger because people can continue stacking while their stacks are in the vaults. And in addition, it's bringing this really cool new feature of a native stablecoin on the Stacks network that doesn't require a custodian or a banking intermediary, but rather is run on an open distributed network that is governed by the Stacks community through the governance function provided by the Arkadiko token. That to me was a very worthwhile experiment. And so we're really excited to see how the next few weeks and months go as Arkadiko sort of goes into this launch mode, continues to attract value, and starts, hopefully we'll start seeing some volatility, and we'll see how the system functions through some periods of liquidations. Hopefully my vault won't get liquidated, but it probably will at some point. And I think, again, it's really exciting to see, the Stacks ecosystem reaching this point where we can actually start to see some of these newer use cases coming to fruition. And again, our vision and our view is that we want to support networks that are value creative to Bitcoin and continue to leverage the security and the resilience of the Bitcoin network. And I think, again, if we look at what Stacks has done, the transparency with which the foundation operates, the transparency and consistency with which the original sort of Stacks network launch was conducted, I think that really makes Stacks a great protocol and ecosystem to partner with. And for us as CoinShares, we're a publicly listed company. We manage $7 billion in assets. We have to be really strategic about where we make investments. And, given all of the time spent in the Blockstack ecosystem and, having met the Arkadiko team and collaborated with them, it was just a no-brainer for us. We're going to continue to make investments in the Stacks ecosystem. So if you're working on something, please feel free to DM me. But we're really excited to see the Stacks ecosystem continue to grow. And again, I think having this USDA stablecoin that can now be utilized throughout a variety of different Stacks applications will allow, it's really a building block that more and more people can build on. So we're really excited to support the team. We're going to be putting out some more news around other things we're doing in the Stacks ecosystem as well. And we're just really, happy to be a part of this and to continue to contribute, hopefully, to the Stacks ecosystem in a positive and value creative way.
This is awesome. I feel like it really does feel like a different ecosystem now, especially after the mainnet launch in January. And I keep thinking back to how in the Bitcoin community, there has been this thesis for a very long time that many of the successful experiments in crypto will eventually get implemented on Bitcoin. So if you think about USDA, in many ways, this is like the idea of stable coins, but now it's coming to the Bitcoin ecosystem, but it's coming with its own kind of unique touch because these transactions are settling on Bitcoin. Or more importantly, the collateral is going to earn a pure Bitcoin yield, right? But that's the moment when, for example, Maker went live in Ethereum. And I think we're seeing the rate of innovation just really pick up, and things are speeding up because people are looking at interesting ideas that have happened outside of Bitcoin and very quickly coming up with their own versions and their own improvements of what that could look like in the Bitcoin and Stacks ecosystem.
Yeah, definitely. It's like a contrarian investment kind of thesis hidden in plain sight, built on Bitcoin. And we're definitely seeing an amazing amount of growth, both with stuff that was already done that just needs to be done on Bitcoin or can be done on Bitcoin, and even new projects that weren't possible before. So thanks so much, Meltem, for your support. It's been amazing. I have one question for Philip and Chiente. Are you all considering having some integration between the two projects, or is there any sort of use case that you all envision combining forces with?
Yeah, I'll let Chiente answer that question, but just want to say...
Yes, Philip dragged me in today because he said he would be too tired and I just have to ramble for him. And the quick answer is absolutely yes. Philip, right? Yes? We are fully integrated.
Most definitely. I told her, look, Chiente, you talk for the whole hour if you want to. I'm pretty much that.
Just like we're going to be fully integrated with the Miami coin and other wonderful city coins will be fully integrated with the USDA. So by mainland launch, hopefully we will have USDA, XBTC stacks and other native stacks tokens on our platform, and one can do beautiful things. One can put a stack the collateral and borrow USDA and use that USDA to do something, to swap something else and do yield farming, etc., etc. So the short answer is yes.
I was gonna add, Chiente, you have your testnet up and running in the last few weeks. In fact, if I'm not mistaken, USDA is the stable coin that you use to swap against Bitcoin or to go margin long or short. Correct me if I'm wrong.
No, you're not right. You were one of our first testers. Yes, absolutely. So USDA is not testnet. I mean, testnet is a very interesting thing, right? In the sense that, it's almost like you have to reverse engineer what is your purpose of the testnet. I actually believe it's not a few weeks. It's only been 10 days. I feel like we are like 10 years older. So I don't know how you enjoy your testnet. It's just only 10 days, but every day, I would say every second, every minute, we get a bug report. We are just making ourselves better and better. And thank you for the shout out on Twitter about our UI UX experience. And that's something that we put a lot of emphasis on, is that we want to have the user experience like a Robin Hood. We want it because I think at the end of the day, we do want to bridge to the fiat world. And we want to give the people the experience of something very familiar. But also, if I may take another minute, I'm going to shout out because I really, really want to shout out to the fantastic stacks builders. And here, it's really happened only past few weeks, right? We have teamed up with the CityCoins Guild. A shout out to Asteria. They are held of the stack builders. Hank, Jeff, and Obi, who are also now right next to us. And then Zen, Jude, Marvin, who have been working very, very closely with our dev team. So when we're talking about, cohort or the stacks, cohort like Philippe and myself, we definitely are not alone. We have really the best support we could get from the stacks ecosystem. And particularly past few days when Asteria, when Hank, Jeff all came to help try to break our testnet, I just have this vision of in the Avengers, the end game, all the heroes come, all the movie come together for the final battle against Thanos. So I hope at the end, by the men and large, we're going to win this battle.
Yeah, so Patrick, long story short, Arkadiko and Alex are going to be collaborating really closely together once Alex hits some mainnet. But that's not the only thing. I think one of the things we want to do, obviously, is that the stablecoin needs to be used, needs to be integrated into other DeFi protocols. We need to incentivize teams to do that. So we'll be running with our treasury small hackathons, grants to foster not the only Arkadiko ecosystem, but also Stacks ecosystem as a whole. So we do want to incentivize those teams because our stablecoin, arguably, it should be everywhere, and that's why we built it. And Meltem, one last thing I wanted to say is amazing pitch, by the way, on Arkadiko and Stacks. I wish I had you everywhere where I speak.
Matt Coons, do you have a question? You can go ahead.
Yeah, thank you. Thanks for having me up. Circling back a little to the beginning, if I have a wallet of Bitcoin and Stacks, what are the limitations of my Bitcoin in the Stacks ecosystem compared to just using my Stacks coin? Are there abilities that I am limited to for my Bitcoin?
I think it's the other way around actually, because your Bitcoin derivative, let's not call it Bitcoin because it's derived from Bitcoin, it follows the price of Bitcoin, like XBTC, is actually more expressive in the Stacks world because it's programmable in the Stacks world. But then it's not, it doesn't have the same level of security that you would have with Bitcoin on the main chain. right? So that's why we want to enable more and more things with just pure Bitcoin transactions, right? Like where you can just do a simple Bitcoin transaction, Bitcoin stays on the main chain, but interesting things happen on the smart contract side over there. But if you're willing to, some people are fine with holding XBDC or some other type of a Bitcoin derivative asset. If you're fine holding it, that Bitcoin is actually more expressive and more programmable because it's native in the smart contracts. People can write code against it much more easily than with Bitcoin on the pure chain. I'll let others chime in as well, but I think Shannon knows this. I'm going to jump on a meeting. I'll leave this on and maybe check back after my meeting is done. Thanks so much, everyone.
Thanks, Muneeb. David, go ahead with your question.
Yeah, thanks for having me up. First, I just want to say, congratulations to I applaud all the developers and rebuilding this. Just, great job to you guys. So I also do follow, the other Bitcoin DeFi projects, Operant, and they're going to be releasing a stable coin. And, they've kind of hinted that they'll be able to use state channels to bring it onto Lightning. And so to be able to use, a stable coin on Lightning Network, I think in the short term is potentially very compelling. And I don't really know if that's technically possible, but I don't know. Have you guys considered that? Is it possible to kind of bring it outside of the Stacks ecosystem and into state channels?
I'm not personally super familiar with what state channels are or do, but one thing that is in development, and it is a proof of concept today, but it's called Lightning Swap, LN Swap, which allows you to trade any native Stacks node against Bitcoin on a Lightning channel. So that could facilitate your use case. And so, for instance, you could trade a stable coin that is on Stacks against Bitcoin in a Lightning channel. That software exists today. It's in production. It's running on mainnet. I don't think it has been tested at scale, or it is, commercially available, but it could be built out. So yes, the technology is there. I think a team just has to perfect it in the next few weeks and months, and then you would be able to swap Lightning and Stacks tokens.
Okay, interesting. Thanks.
Matthew Bennett, you can go ahead.
Oh, hi, thanks very much. I'm listening to you tonight from Spain. Very interesting to hear what you're all doing and how this world is changing. I'm just wondering as well, apart from the technical things and the financial possibilities, if you had any problems with financial or securities authorities in the States because of trying to do loans and things on top of Bitcoin.
Yeah, so I can't really comment on the legal side today. We have not officially had any legal problems. But as you know, crypto is this gray zone, especially in the US. Legislation is still forming. So I can't really comment on what will happen or what has happened even. But I can just tell you that today, no. In the future, obviously, we want to work together with lawmakers and see what happens. Having said that, we're still pretty small, so I think other protocols will lead the way, and then we're happy to follow the law, and whatever gets set in stone, we will have to follow.
Okay, thanks very much.
Thomas McCarthy, go ahead.
Hi, sorry. So I'm coming in late to the discussion because I was commuting. Can I ask a Stacks question? Is that okay?
Yeah, sure.
Okay, great. So just to give a little bit of context, one of my good friends who actually got me into Bitcoin and was sort of guiding me into this space, he comes from like the programming side, and so he was very early on into other like contract platforms, which I won't name, but I'm sure you can guess. And so he started programming smart contracts, and I asked him a question. I said, "Do you prefer contracts on Solidity, Clarity?" And he actually preferred Clarity, which I thought was amazing. I think and he explained why, and Muneeb has talked about it before, so I won't reiterate. But he did say that the one, I guess, critique or drawback of, writing deploying contracts on Stacks is that he asked me
when did I think finality occurred? And I said, the anchor Bitcoin block. So because there is that delay of, every 10 minutes, I'm just kind of curious, and I'm not looking for a straight answer like right now, but, has the team considered what can be done to ensure that finality is done as fast as possible from the Stacks chain? And do you, or even disagree and say that, Stack, when a transaction is settled, Stacks, let me actually disagree with my opinion. If you think finality actually occurs on Stacks instead of the anchor coin block when all those Stacks transactions are eventually hashed. So that's essentially just my question. And again, coming from a question from someone I talked to who is a programmer and smart contracts in both clarity and solidity.
So do you want to cover that, given that you are pretty deep into the smart contract?
Yeah, that's a very deep technical question, I would say. I would agree with what you said. I mean, finality should happen when an anchor block gets mined. So you have micro blocks, which is like a stream of execution in between anchor blocks, and then those anchor blocks they settle onto Bitcoin. I'm not sure how exactly blockchain engineered Stacks optimize the speed or how fast these anchor blocks are settled onto Bitcoin, but you can definitely check the hashes. You can see when a Stacks block gets settled onto Bitcoin, because the Bitcoin block height is always included in the Stacks anchor block, and so they do run in sync. So technically, every Stacks block should be included in every Bitcoin block that gets mined. So I would assume that's a synchronization, since every time a Bitcoin block gets mined, also a Stacks block gets mined, that they're completely in sync. However, I have not technically, very deeply double checked that, but my proposal to you would be go and talk to someone like Jude Nelson. He's one of the blockchain engineers at Stacks. He definitely can give you a better and technically more refined answer than what I did just now. But I do think you're right. And then, like I said, they are in sync. So technically they should settle approximately at the same time.
Codex, you have the floor if you have a question.
Hi, Philip. Congrats on the launch. I have a question regarding the Oracle. So basically, there is a smart contract where Oracle can update the prices. I'm curious how this process is done. How frequently are these prices are setting, and basically, what is the security measures that this is the right prices? Where do they come from? Thanks.
Yep. Yeah, good question. So before I dive into that, I do want to talk a little bit really shortly about the risk. There's smart contract risk, meaning you're trusting code that everything gets handled well. There is pegging risk. Our stable coin is soft pegged to the US dollar, but that peg might break. It might be temporarily broken or for longer times, but technically we should always aim for $1. And so the third risk, which is Oracle risk, and I think those three risks are the biggest risk in Arkadiko today. You have this Oracle risk. And so an Oracle is basically something, in our case for Arkadiko, is something that tells you the truth on chain about the price of an asset. And so where does that price come from? Well, today it's an aggregation of several APIs. So every hour we push the latest price to the Stacks Oracle, to our Arkadiko Stacks Oracle. And the prices come from a combination of the CoinMarketCap API, the Binance API, the CoinGecko API, and we do take the average of that. So we are not as decentralized today as something like Chainlink, which is, by the way, coming to Stacks as well, and which we will integrate as soon as that's available. But it's not available today, so that's why we built our own Oracle, where we take the aggregates or the average price of those services. So that's how we do it for the Stacks token. For our Deco token, we just take the price from our automated market maker, from our own decentralized exchange. And for XBTC, we just take Bitcoin price in the same method that I just described for Stacks. And so while this is not the perfect solution, it is kind of the best solution that is out there today on the Stacks blockchain. I'm not sure this will be improved once Chainlink integration is out.
Cool, thanks.
Crypto Rant, go ahead with your question. Go ahead, Crypto Rant. Okay, I think while Crypto Rant is coming up, Patrick or Dan, do you have any other questions?
Codex, one I went through.
Codex just asked. Crypto Rant, if you want to unmute yourself, you can go ahead.
Yeah, I had a question around, and this is Dan, by the way, for those listening. I had a question around like some of the, for folks over at Alex, some of the kind of like lending, borrowing, and AMM functions. What are you guys going to start off with first? Because I've explored this with Sovereign, and it was really interesting seeing how. And by the way, Stacks, your mic is off, or your mic is on Stacks' Twitter account. So, yeah, I was really curious to kind of hear more about like how do you launch something like this in terms of like do you open up certain types of smart contracts first, or is it all at once? Can you kind of walk me through that?
Sure. Thank you for the question. I think for now, what we have already in the testnet is the lend borrow is fixed rate, fixed term, and then again without the collateral, without the liquidation risk. So that one is done because that was the first thing we have built. When we came to Stacks end of May, when I first met Muneeb and Patrick, I think the impression is that, look, we are the financial quant, we're the nerds who have been writing smart contract for more than 20 years just on the closed chain. So we want to see first, what are the financial primitives that Stacks ecosystem need. So once we are done with the lend borrow fixed rate, fixed term collateral rebalancing, and we start talking to our cohort and realize that everybody needs a launch pad. So I think the first thing will be done for the mainnet is also the launch pad, so that there are lots of fantastic cohort projects such as Layer, C, Block Survey, etc., can launch a token on Alex, really creating a financial market for them. The DEX, that's an interesting question, right? So there are two types of DEX. One is AM and type of DEX. Obviously, the technology is there. One just need to really just copy it and build on Stacks. But what we found, because of somebody was just mentioning about the 10 minutes time about the settling about the Bitcoin, what we found that it would be really interesting for our users to have a kind of a order book type of off-chain type of order book type of DEX. So that should be done by end of the year. And this is in cooperation with Marvin. I hope he's here right now. Very, very senior Clarity developer. Now, yield farming, etc., is really just the extension of the underlying liquidity protocol you have. So, for example, the margin trading is already there. That's in conjunction with flash loan, etc. And I think this is really an interesting question, right? A lot of people have been, asking us, right? Why don't you just make your life easy? Just have one simple story. Just say you are lend borrow fixed rate, fixed term without liquidation rate. That's it, right? But I think in order to serve the whole ecosystem well, the question we ask ourselves is what can we build for the whole ecosystem? Because we want to grow with everybody exponentially. And what can we do? It's all about comparative advantage, right? What can a group of financial quants do really fast with the help of a group of fantastic smart contract developers to build the bits and pieces of financial primitives for the whole ecosystem to use. Hence, the story about, now this is our narrative. Alex bring the Bitcoin to life is really the whole financial world, right? You can lend borrow, you can launch your project, you can DEX, and you can yield farm. I hope I answered your question.
Yeah, that did. Really appreciate that. And I do have to hop here right at 5. Really appreciate y'all having me. And cheers, y'all.
Thanks, Dan. Here. We have time for one more question. Zero Authority, do you want to go ahead?
Hey, everyone. Thanks so much for doing this today. Philip, Chiente, thanks so much. The utility you guys are adding to Bitcoin and Stacks is just unreal. So there was recently the announcement for Orbit chain. Do you guys foresee people bringing their native tokens from different blockchains over to Stacks and using it in Arkadiko and Alex, or is that something too far off into the future? Thanks.
Yeah, I can comment a bit on that, and maybe more general on multi-chain world. So today you have the stablecoin USD on Stacks, right? And it just sits on Stacks. But what if people want to take it somewhere else? So we're definitely actively already looking into how can we port our stablecoin. There's multiple ways of doing that. So one way would be on the Stacks side, force people rather to lock up their USDA, and then it could be minted on other sites, on another chain, whether that's Solana, Ethereum, Avalanche, something else. That's one way. Another way is to build a real port, and I think several teams are working on that today. Whether that's Orbit chain or a Stacks native team, there are chains coming, and so these chains are needed if you want to port TVL, so total value locked, from other DeFi protocols and other chains onto Stacks. You need that. You cannot expect users to just quit their whole position on one chain and then, reboot that position, as a matter of speaking, on the Stacks chain. So chains are highly needed. I'm not familiar, technically, with what Orbit chain does exactly. So I can say that Arkadiko is not working with them today, but we might in the future. I have to look into that, to be honest. But so for me, it is just a matter of time before assets get ported, whether that's through a wormhole or another way through a smart contract. But we are living in a multi-chain world, and we cannot just ignore those other chains just because there's tons of TVL locked.
Thanks, Philip. That was great. Frankie, I think we're at time.
All right, friends, I think that is all for today. And I know many of you likely have a ton of questions that haven't been answered. So I'd encourage you to head to Discord and search for your favorite brands to continue this conversation. Lastly, join us next week on Crypto Internet as we connect with founders who are building social media networks on top of Bitcoin. Have a great day.
Thanks, see you.
Thanks, everyone. Thanks,
Thank
Philip.
you. Bye.